I request the boardroom to kindly unmute. I request the boardroom to kindly unmute.
With the company depository, and I request same to be taken as read. Now I request Mr. Vasudevan Ramamurthy, Chairman Emeritus of the company, to say a few words on the growth and prospects of this company going ahead. Please, Vasu.
Yeah. We are thankful to you all for your continuing support and faith on a company. Last couple of years, execution-wise, your company is consistently growing at an average of about 20 to 25%. However, the accounting numbers may not reflect it regularly since the accounting processes require a different methodology to be followed. Sometimes the actual growth of the financial numbers don't really reflect the performance of the company. We have been with continuous enhancement of order book of both EPC and real estate. We are confident that the way forward your company will poise for annual growth of 20% and above. With a disciplined and a controlled financial practices, we are also able to upgrade our external credit rating for BB plus, BBB plus from CRISIL and augmented our working capital limit from 300 crores to 640 crores. Currently, we are well poised for further rating upgrade, which we seriously pursuing and also enhancing our working capital limit and better terms and conditions with the banks. These steps will further strengthen our market position and our growth path. As you all would by now come to know about the sale of subsidiary GMP, a specialty clean room partition company with us for over a period of almost 2 decades. There was some amount of criticism from some for selling the potential business. We had been nurturing this company and had brought it to a strong contender for acquisition in the last 2-3 years. We had moved with a specific strategy of getting out of all non-core assets. And although the top line of the company was consistently growing, the bottom line was not in proportionate and league with the company's overall average bottom line growth. So what we thought was, so we bring the company to a level that it is attractive for an acquirer to look at, and also then look for a strategic acquirer for the existing person. It becomes an attractive proposition as well. So we pursued this goal, and we took about 2 years of time, and then a Japanese company strong in manufacturing, keen on takeover, and we decided to go ahead with them, was interested in it, and we decided to take an exit as we are confident that by focusing in our core business, we could create an IRR of 20% on the net capital of about 120 crores, which we are supposed to be in surplus from the sale of this venture. Now I request Mr. Somnath Biswas, Chief Financial Officer of the company, to give a brief presentation.
Can you, Nilam, next slide, please. So Vascon was effectively holding 85% stake in the GMP, and GMP is one of the leading turnkey project for clean room partition, which is having factory at Hishachal, then Punjab, Mohali, and then Bhiwandi also. So we augmented this entity last couple of years. Substantial time has been spent on the revival of the GMP to bring into that level, and as a result, we have a good amount of factories, and the company is starting doing really good business, and both in the top line and bottom line, as well as having a sufficient order book in their hands also. Next one, please. Next slide, please. So as I told that it is a part of our hive of the non-core assets, so we are driving up this thing for quite a bit of time. But before getting into that, we wanted to bring the actual value of the company on the market, and that's why now the company is valued in the range of almost 185 crore. And Vascon is hiving off his 12,689 share, which is 85% share, which will be the gross consideration will be in the range of 155 to 157 crore. So in effect, what will happen in Vascon consolidated books of accounts, last year, if you look at that in consolidated FY 23-24, the JMP is having contribution of 301 crore top line and 7 crore PAT, which comprise 28% of the revenue and 9% of the PAT. As against this 157 crore, what we are talking about, for as a Vascon share, this is a gross amount. Post tax and post other expenses and all these things, the net sale proceeds, net cash inflow will be in the range of 110 crore, which will be majorly utilized for the growth capital for both real estate and to create some kind of collateral for EPC division to augment its further working capital limit. So that is the strategy we are taking ahead for the utilization of this sale proceed. Thank you very much.
I thank all. Can everybody hear it?
You're audible, sir. Thank you.
Yeah. Thank you all for the support of all the shareholders and giving us a unanimous support of passing the resolution. The various questions which you have raised, generally, I have already explained in my speech prior to the beginning of the proceedings in terms of what are the reasons of getting the stake sale in GMP. This was a company which we are at for more than 2 decades, and it had its own ups and downs, and it was a good specialty product company. The top line growth was very good, consistent, but corresponding bottom line growth was not commensurate with the quality of growth in the top line. So as a result, the average EBITDA levels of the company and the average PAT levels of company were being brought down by the performance of this company. That was one. Second, the company also required bandwidth and strategic support in terms of further growth. And then we found this company from Japan pursuing us. And in the last 2-3 years, we had strategically planned. In fact, last 4-5 years, if we had seen, we had announced this also, that we are getting out of all non-core businesses and concentrating on the core business of real estate and EPC. So we had got rid of all investments in hotels, investments in other areas, including the investment in GMP, which was the last in target. This was a big investment. It was materially a substantial influence in the Vascon balance sheet. We had almost 30% of the top line coming from this company. The location was spread across 3 locations in where manufacturing was set up, and we were looking out for a outright exit from this unit, and we got a good proposal from Shinroi. The valuation was good, much better than what the market was foreseeing it at. And so we closed this deal. Essentially, with the closure of the company, as we had already shown you, that we are likely to be about 110 crores surplus by the sale, net surplus after the deduction of various expenses and taxes and stuff like that, will be surplus of about 110 crores. This 110 crores, we are confident by employing it in real estate and in growth in EPC as well, some amount of capital required in EPC as well. We will be able to give 30% IRR on this growth, which was much ahead of what we were getting from the return of this company itself. So that was one of the main reasons why we went into an exit from this. Rest of the questions Mr. Somnath will answer to you.
So thank you everyone showing your confidence and support to us. The broad structure already little described by Mr. Vasudevan. So I am going question by question and answer. So start with Mr. Kamal Kishore Jawar, that his his wish list that say 70, the share price should move 70 to 150. That is also our endeavor to get it that level. So this investment and QIP, we are quite hopeful that this growth rate of the company will be much faster and it will be reflected in the stock value in coming days. Next, there is no question, but there is a suggestion from Mr. Vinay Vishnu that speaker serial number. Obviously, it will be taken care. Already Neelam communicated you also, so that will be taken care. And project specific details, yes, we will try to give it, but it will be given in the AGM because since this AGM is only specific to GMP, so our presentation was limited to only GMP. But in forthcoming AGM, definitely the project-wise details will be given. Mr. Srikant Jawara also talked about some clarification with our company secretary. Neelam will take care and take it forward. Coming to the number of questions raised by Mr. Keshav Gaur. So I'm going one by one. Post GMP, the financial will be. So already we explained that if I look at that FY 23-24, GMP contributed close to 300 crore top line and 7 crore PAT. So that will be moved from the consolidated number. But with this investment and further growth story, we are quite hopeful. Whatever the top line and bottom. I start with top line. What are the top line we are losing from GMP? Where we will be able to cover up this top line well enough from our standalone business, that is real estate EPC. And since GMP, if you look at that, EBITDA percentage is quite low as well as ROC and IRR. So with real estate and EPC business will contribute much more better EBITDA and ROC in coming days in standalone only. You asked about the real estate EBITDA. Real estate EBITDA, currently we are in the range of close to 22% or more. But as already we communicated earlier also by Mr. Vasudevan that real estate number doesn't reflect financial on year-on-year basis. That's because real estate revenue only get recognized once the project gets completed, not prior to that. So whatever the performance happening year-on-year, that is not reflected in the books of accounts year-on-year basis. So you asked about the real estate revenue. It is very difficult. I cannot confirm that financial year 24-25 by 25-26 how it will look like. But if you look at our investor presentation, I think you have gone through the number. Investor presentation you have talked about that in current ongoing project, which is already project has been launched and it is underway. So since we cannot recognize the revenue unless it gets completed, so that ongoing project is having a revenue top line potential of 350 crore. And whatever the projects are on the pipeline, that is another 1300 to 1400 crore top line as there. So close to 1700 to 1800 top line will be reflected over a span of next 4 to 5 years. So it cannot be equally, but you can have that average number. If you want to look at the real estate number, you can have that average number. The 1800 over a span of next 5 years, that will be the top line. You can easily envisage from the real estate division. EPC working capital, there is probably your number slightly, there is a gap. See, our current working capital has been augmented from 300 to 640 crore. Currently, we have EPC working capital, fund-based and non-fund-based put together 640 crore. It is not 340. And this working capital is enough to what the current order book which you are having in the range of 3,500 is enough to cater that kind of things. But since 3,500 is not our target is much more beyond that. So that's why we need to augment our working capital, which we are talking about that some part of the GMP proceed. And obviously we'll come back to QIP also. Some QIP procedures also supposed to create some collateral as because any banking working capital augmentation need a good reasonable collateral as a support for this thing. So that will help us to raise our working capital limit another 200 crore or more. That is our target so that we can take our order book much beyond that 3,500 crore. That operation margin you are talking about, we cannot comment on the GOP level of the other peer review. Where if you look at the peer company, the Aluwalia, MAN and all these things, we cannot comment on the GOP level as because everybody is having the top line your gross profit is manner different. Somebody takes salary in the top line, somebody takes salary in the bottom line. So this moves are different. But if you look at that EBITDA or PBT level, we are very much at par with our competitor. If you take any name, The PBT level is at par with any of our competitor. The size is different, but the percentage-wise, we are very much at par with any competitor, be it MAN, be it Capacite, be it Ahluwalia, we are very much at par with the competitor level, which is in the range of 10 to 11%. Now, you are talking about that EPC order value we are targeting for 500. That's because currently in our previous PQ level was supporting us to bid for 500 crore, but now already we have completed 500 crore project for Chhattisgarh. So now our PQ is eligible to bid for more than 600, 650, 700. That kind of bidding is possible. And we are now targeting that kind of bidding, but at the same time, we cannot ignore this 300, 400, 500 crore as because this is a location where you are already operating and where you are operating. Any 300, 400, 500 crore is good enough to support this operating system. So we keep on bidding that level also. But you are correct. The more we move in the upper 500 level, the competition is much more organized, structured, and limited. So we are now eligible for 700 crore plus kind of bidding, and we are going ahead with that also. Your last question was you talked about since we are IBing of GMP, what is the need of QIP? So if you look at our QIP, we already given our objective very clear. We are in the process of launching. We are at the verge of launching 3 real estate projects in Mumbai, 2 redevelopment in Satrapur, and 1 at Powai. And that real estate project needs, since it is a Bombay, and good amount of capital, seed capital is required. So QIP is specifically focused for that 3 project only. So that 3 project needs almost more than 170 crore investment. Out of that, more than 70 crore has been invested from our internal, and 100 crore are supposed to be mitigated from that QIP. So that is the objective for QIP to be launched. But that is not the end road of that real estate. There are a lot of other projects are also going on. If you look at that investor position, we talked about Baner-Pashan Link Road. There are some other projects, and obviously we need something to consolidate in other real estate business. So this GMP proceed will be kept aside as a growth capital for any upcoming real estate project apart from these 3 Mumbai projects. So that is also there. So, and as already explained, that some part also will be utilized for that creating collateral. So it is a good opportunity to have liquidity in the system so that whenever some good potential projects are coming, we should not struggle for the investment point of view. Now, next question from Mr. Dinesh Bhatia. Your question about that GMP value is 185 vis-a-vis 157. So we would like to clarify 185 is the gross enterprise value of the GMP, which talks about 100% share. Since Vascon is holding 85% share, so 185 ka 85% is transferred to 150 to 157. So that is the gross sales proceed we are supposed to receive from GMP. Mr. Rohinton Farmer talked about that lock-in period. So there is no lock-in. The Syndro is outright buying our share. So it is up to Syndro what they want to do their share. So as per the share purchase agreement, there is no lock-in period. Nothing. It is 100%. It is a high power 100% Vascon share. Mr. Kirti Shah talked about emails. Whatever the emails you said, we'll sincerely request if you can just resend that email to our compliance officer email ID. We'll look at what is the content and immediately we'll revert back on the email. Probably either we have missed or we have not received this thing. So we just request you to resend this email so that email will revert back on these things. Next one, Mr. Jahangir Rohinton Bhattiwala. The purpose of this investment already well explained by Mr. Vasudevan, and already we talked about in detail. So I don't think so further it is required as because to justify the purpose. And further investment also we talked about this will be utilized as a growth capital for both majorly for the real estate and partially for the EPC segment also. Mr. Deepak Dave talked about the valuation of 185 crore. We'd like to apprise you that obviously the negotiation was going on for last 2 years to take this valuation up, and it has been substantially moved out in terms of what we are expecting. But at the same time, as a compliance perspective, also we carried out 2 valuation of GMP, so that to ensure that whatever the negotiation happening, we are not at undervalue. but we can confirm that valuation, what we get as a HIBOB, is much more than whatever the valuation done by the two valuers independently for GMP value. So we are well placed, and it is well valued in terms of the HIBOB is concerned. Utilization already we have explained you. Tax liability, obviously there is a capital gain liability is there. So we are working upon this liability, what is the coming up, as because there is some ambiguity in terms of the recent announcement by the government in terms of the capital gain working. So we are getting into the details, as because initially it was 20% to 12.5% no indexation, but there is some explanatory note has been given that some unlisted share transacted between some period that 1st April to 25th April can be looked at. So we are getting into the deep dive of the situation. We will come back to the thing, but there is a tax liability, but quantum is we are trying to optimize how, what is the best thing can be possible. That is more. And last one, Mr. Vikas talked about the corporate office Mumbai to Pune. So you can just put one on the side.
We were originally from Bombay. We were born and brought up in Bombay only. But since our operations were more in Pune, we shifted to Pune. Now it is immaterial, like the way the technology has moved. The head office can be located in any place. We have sites all over the country. So since we all moved to Pune in a time when it was most conducive for most of us to shift, now I think we've settled our base as Pune, and then we'll be growing from here. You can always have calling over here to Pune to visit. In fact, the AGM, someone had asked, yes, the AGM is physically being held this time, and it is in Pune. And so when some of you come, we can also organize to show you some visits if required.